Well, Cameron Brandt is Director of Research at EPFR Global, and he's joining us now to take some questions. Cameron, great to have you with us here. Thank you very much for your time. Before I come to you, Cameron, for our viewers and for you, I want to just put out, just a few headlines from the newspaper, the Financial Times, recent headlines from the Financial Times. I just want to sort of read them out to you and then ask you for your reaction. Look at this. This is basically the China plus one theme, but for portfolio flows, right? The first headline, China is, quote unquote, cancelled for many foreign investors. I mean, these are not our stories. These are stories from the Financial Times quoting lots of foreign investors out of China and Asia. Clients rush for Asia investment products that exclude China. Number 3, pension funds recoiling from China, says a Dutch asset manager, one of the largest Dutch asset managers, actually. And of course, I mean, a few others. So, Cameron, I just want to ask you, what do you make of all of this? This is a topic we've discussed in the past, but is this picking up steam? Are you hearing sort of, things like this from investors that you speak with? And is it showing up in flows yet?
The sort of general narrative from the investor side is definitely more cautious than it has been. But China remains very hard to ignore, especially given the widespread expectation, and I would include myself in this, that the stimulus measures that we're already seeing starting to be introduced will pick up in the second half of the year. So even though China is viewed much more cautiously in the wake of the very aggressive COVID containment lockdown last year, it remains too tempting for foreign investors to completely avoid. And we saw, another $2 billion go into dedicated China equity funds last week.
So maybe this theme has been overdone a little bit, maybe in the near term. But the larger fact is that China is of the MSCI Emerging Market Index, China makes up 30%, or 31%, around about there. The idea, or what the bet seems to be, is that maybe that weight comes off a little bit, maybe a few percentage points. And since this has got hundreds of billions of dollars benchmarked to it, it's a lot of money to be distributed to other markets if that were to happen. So that seems to be the broad thinking. Agree with it, Cameron?
Yeah, I do. And we've been seeing that in the fund flows, even though China equity funds frequently end up at the top of the weekly flow table in pure dollar terms. Investors are looking at Asia much more broadly. And indeed, in this past week, dedicated India equity funds had their biggest weekly inflow since the first quarter of 2015.
What were the inflows into India dedicated funds? You said they're the highest level since Q1 of FY15.
Yep, they were a little over 500 million.
Okay, and what has been the average, say, over the last couple of months, to put it in perspective?
The average has been steadily creeping up. Before interest in India really took off, we were sort of looking around the 50 to 80 million a week. But in recent weeks, it's moved steadily up. Even before this week, we were starting to see fairly routine inflows of 250, 300 million. So interest is definitely building. And India is really being seen as a very credible alternative to China exposure at the moment.
That's almost double of the average, 250 to 300 turning into 500. Cameron, the other day we spoke with Mark Mobius, and he suggested that there's a possibility that South Korea will be moved from the emerging market category to the developed market category. If that were to happen, the 12% weight that South Korea currently enjoys, those funds free up. Do you think that would be an India positive, a further impetus for India?
It would, though I would hasten to say that having been sort of watching this for a long time, I wouldn't rush to bet on Korea getting that upgrade. it continues to be a difficult environment for foreign investors. And though many nominal reforms have been made, actual practice remains inimical to getting the upgrade. However, were it to happen, yes, I think India would certainly be a major beneficiary. The timing would be good because, as we've been discussing, investors are looking to put chips on markets other than China.
Cameron, just to go back to the India dedicated flows, is this mostly through the ETF? Is this $500 million largely ETF or non-ETF?
It's biased towards ETF, but certainly not completely. And, I'm assuming that the point of your question is, are we seeing more long-term money heading towards India? And I think the answer there is yes.
No, I mean, the other sort of thing that I wanted to, because ETF money also chases momentum, right?
Right.
So, and we're not lacking for momentum here in India, Cameron, as we were just discussing, right? I mean, the Nifty just galloping away. So you get momentum, a lot of momentum money, which can come in very quickly. So, is bulk of this 500 million that?
I would say over 50% is, but the narrative around India at the moment is very positive in a long-term sense. A lot of focus on the growth rates that you're achieving, the demographic dividend that people hope you will be able to cash in on. And investors were, I think, a little cautious to jump on this bandwagon. So, the money that's coming in lately isn't just sort of a rush of hot money to chase the indexes higher.
Cameron, very quickly, you said the inflows into India via the dedicated funds has practically doubled in the last couple of months. Even the rest of the emerging markets have done well. Year-to-date, Kospi is up 16%, Nikkei is up 28%, Taiwan is up 20%. Don't want to get into specific numbers about these individual, but have the rest of the emerging markets also seen inflows doubling? Or has India managed to garner a disproportionate share?
India's the acceleration of flows into the India funds stands out. Some of the other markets have seen strong support, but it's not grown in the way that we've seen the flows into India funds.
All right. Thanks a lot, Cameron, for joining in and giving us your views. The Indians out here will be extremely happy to know that the funds are accelerating, and more importantly, these are long-term funds and not something that will just, fly away as the momentum turns on the other side. We take a short break. On the other side, we get you our list of top stocks.